right, so how am I planning to use my silver and gold to kind of minimize or kind of lessen the effects of future inflation? Well, if you're curious about that, I'll tell you. All right, so how can silver hedge against future inflation, or how do I see my bullion being a hedge against future inflation? So let me just give you real basic the difference between silver bullion and U.S. currency, just a real basic difference. So basically, the price of metal goes up when the value of the dollar goes down. All right, a $20 bill is cheap to produce. I mean, some ink, a few printing presses, a few employees to flip a switch or two, and you just produced $100,000 in U.S. currency in about 5 minutes. Okay, so I'll admit there's probably more to it than that, but I would say probably not much more to it than that. Silver bullion, on the other hand, it has to be found. Somebody has to go out and find it. It's got to be removed from the earth, sometimes deep in the earth. Has to be carted to the surface. Has to be processed and shipped to a refiner. And then a refiner has a bunch of stuff it's got to do. I mean, a refiner's got to purify the raw material, and it's got to turn it into consumable product for us consumers and industry. All right. So contrary to a lot of beliefs out there, silver is rare. If it wasn't rare, everybody would have it. It would be easy to get, and it would have no value. So it is rare. Now, how rare it is up for debate, but it is a rare metal. And so, that's in itself gives it value. All right, so what does that have to do with a hedge against inflation? Okay, so real quickly, what is inflation? Okay, the dictionary definition of inflation is a sustained increase in the general price level of goods and services in the economy over a period of time. Basically, what that says is that the rise in expense over a period of time is inflation. So basically, what a dollar buys today, it won't buy as much tomorrow or in the future. That's basically, in a nutshell, what inflation is. Okay, but silver, like other commodities, is what they call a real asset. It means it's physical. It's something you can touch it, you can feel it. But unlike a lot of other commodities, silver has intrinsic value, which means that it has value simply because it is silver. The fact that we put value in this metal gives it value, and silver is always going to be silver. So that means it's always going to have that intrinsic value. All right, so how can intrinsic value be a hedge against inflation? As the dollar is devalued, the price of bullion, or the value of bullion, is going to increase in value. Okay, that is because if it costs more, because the value of the dollar has decreased over time, inflation, if the dollar has decreased in value, it's going to buy less. It's going to buy less gas. It's going to buy less machinery. It's going to cost more to produce that 1 ounce today than it did a year ago. You're going to have to pay employees more because things cost more. All right. So as the price to produce that 1 ounce of silver goes up, just naturally the price of that 1 ounce of silver is going to go up. The value is going to go up because it's going to cost more now. And like we just talked about, it costs a whole lot less to produce a $20 bill than it does to produce 1 ounce of silver. So we hedge against inflation with precious metals because we are expecting inflation to push the value of precious metals up. So as the dollar goes down in value, the price of the precious metals, or the value of the precious metals, is just going to go up. All right, so this is my silver bet, and I'm sure I'm not alone in this gamble. Right now, the economy is moving along pretty good. I mean, everything seems to be in balance from a layperson like me's standpoint or point of view. Things seem to be going on pretty good. The economy seems to be going pretty good. I mean, and economists, they like this. They like when the economy is like this because things are happening at a steady rate. And that means that it's easy to track and therefore easy to control. If things start to move a bit too fast or they start to move just a little bit too slow, then the Fed starts to play around with interest rates. And that's a whole nother video. Okay, so what I believe, and I'm sure I'm not alone in this, is that at some future time, because of too much government spending and manipulation by the Fed, inflation is going to destroy the purchasing power of the dollar. I mean, buying something now is pretty expensive, but I'm gambling that it's going to be so much more in the future. All right. When pricing levels increase, purchasing power decreases. Our unit of currency will buy less goods and services. Okay, so people start to look for an alternative to that ever shrinking dollar. And what are they going to turn to? Well, they're going to turn to real assets. They're going to turn to commodities. And since not everyone can afford to invest in real estate, not everyone can go out and buy a cattle ranch, they're going to turn to precious metals. They're going to turn to real assets, something with intrinsic value, right? And since silver, out of all the precious metals, is the most economical or the most affordable, they're going to turn to silver. Now, this is the gamble. If demand suddenly increases for silver, but the production stays pretty much the same or dips slightly, there'll be less silver to go around. Now, keep in mind, silver is a rare metal. It's a precious metal. And if the demand suddenly increases for silver and the production stays the same or dips slightly, now keep in mind with the dollar being with inflation, it costs more now to produce it than when we bought it now and in the past. It's going to be worth more. Now this is the hedge. The fact that it's worth more now than it was when we bought it, that extra or that dividend is going to pay off when or if we decide to turn our precious metals into cash. Okay, and so there's the hedge. Because it has increased in value since we bought it, because of inflation, because of rarity, because of the demand that's going to come in the future for silver, it's going to be worth more. It's going to be worth a lot more. And that's the gamble. But that's the hedge also, because it's going to be worth more than it was when we bought it. At least that's what we're hoping. So the more silver you invest in now, the more physical silver you put away now, the less effects you'll have to weather or endure in the future from inflation. That's the hedge. That's the gamble that we're taking. Now, that's a simplistic way to put it, and I wish I had better words to use than what I do. But that's basically it in a nutshell. I mean, we are hedging against future inflation with our silver. That's the whole thing. That's the whole point of stacking it now. So when you hear people say, well, you're losing money by buying it with this, or you can't go with the ratio this way because of this and that, those things, they're important, but not as important as the amount, the sheer number of ounces that we're putting away. I want to be able in the future, to go to my stack and grab some silver out and not have to worry about where spot price is at the time, because I have so much silver put away that I don't have to worry about where spot price is, because I have so much weight. I have so many ounces that basically my stack has made my purchasing power with my bullion spot price proof. I go get 10 ounces or 20 ounces or what have you, and because I have so much of it, it doesn't matter where spot price happens to be at the time I need to use my silver. At least that's my goal. That's where I'm going. That's going to be my hedge against inflation. So what's yours? Okay, like I said, that's a simplistic way to put it. There's a lot more detail that goes into it than that, but that's basically it in a nutshell. That's how I plan to use my silver as a hedge against inflation. A little bit of a economy lesson in there, and I'm sure I got a lot of that stuff kind of mixed up or maybe wrong. But anyway, leave me a comment. Let me know what you think of this video. Let me know if I'm doing it wrong or if I can do it better, or how you're doing it. Maybe you're doing it better or more efficiently than I am, but that's my way, and I just want to share that with you guys. Okay, so because of the winter, I'm inside, and so you guys are going to probably get a few more of these kind of videos before I get out and about and start going to different coin shows and seeing coin dealers and talking to different people about bullion and stacking. But it is coming. As soon as the weather breaks, as soon as I can get out of here and start going out and visiting people and going to these different shows, I'll do maybe a few more of these kind of videos. So if you like what you see, go ahead and hit that thumbs up. If you want to see more, please subscribe, and just leave me a comment. Let's just keep this silver train rolling. Anyway, not trying to get rich on my silver, just trying to have enough to where I can kind of sustain my income without having to worry about inflation or where spot price happens to be at the time. Anyway, that's the point of this video. I'm rambling on, so I'm going to end that video now. Thanks for stopping by. Keep stacking. Peace.